Hello and welcome back to a weekly market recap. Here with Knight again. So this past week we saw the market up 1.33%, brings us up year to date 22.60%. Really great week in the market. Now there was some volatility specifically around GDP numbers came out for the third quarter and we actually missed expectation. We grew at a rate of 2% if we grew for the entire year, which missed expectations on where we thought growth would be for the economy. Now, we are still growing the economy, so we're not at stagflation, but we'll talk about that briefly later. The other things that we saw was the S&P's best month the entire year. Now, not surprising that the best month happens right after September, which was the worst month, just a little bit how it goes, but we have closed at all-time highs for the S&P, and a big part of that is because of Biden's new plan unveiling, and specifically what isn't in it, raising the corporate tax rate. So let's jump into the market. Now, what we see is relatively strong performance to start the week, and then sold off a little bit on Tuesday, and then I talked about on Wednesday and Thursday the economic data that we saw and missing those GDP numbers. We saw a sell-off there, but then a pretty good recovery, specifically when we found out that the new unveiling of the soft infrastructure plan was not going to include major tax reform for corporations. We continued to see the rise and really ended the week very strong. So let's talk a little bit about GDP and still growing, but at a slower rate. Now, one of the big fears that we've had is this thing called stagflation. Now, stagflation was experienced in the 70s with oil prices going up. And what happens is the output or the growth of the economy is slowing down or even not growing at all. And then inflation is rising rapidly. Now, we got rid of this by having some very fast and painful interest rate hikes that led to some very painful market corrections. So stagflation has a really bad taste in people's mouths, and it's very worrisome. But in order to have stagflation, you need to see no growth or sometimes even a reduction in growth in addition to inflation and lingering inflation. Now, we're not currently experiencing that. We're experiencing a slowing of growth, but we are still having economic growth. And if it wasn't, right after the pandemic and the opening up, I think we'd actually be pretty excited. Excited is a wrong word. We'd be content with 2% growth. But it is a little bit worrisome to see that our economy isn't growing at the same pace, and we are still seeing these inflationary pressures. Now, some of the questions are, have people stopped buying because we're saving a lot more? Is that leading to reduced economic growth? We still have all these workers that aren't maybe fully able to come back into the workforce. Is that an extra boost that we could see to output when they finally come back post-COVID? Are they going to come back? So we have some catalysts that could change next year, but overall worrisome to see the economic data coming in on both bad for growth and higher inflation, lingering inflation over the past couple months. On the flip side, all of that was really overshadowed by the fact that Biden's new plan, when he came out, is half the size that it originally was going to be. Instead of the $3.5 trillion plan, it came out right around 175, 185. And it did not include raising the corporate tax rate up from 21%. Now, originally, when that was part of the plan, the market sold off close to 5%. If you think about back in September, when we were getting really nervous about the debt ceiling, but also the infrastructure plan and what could be coming out, the market fell 5%, almost just on the fact that we were going to be raising the corporate tax from 25% to 28%. The market was expecting 25. They came out and said, we're going to do 27.5, and the market corrected very rapidly. Now it's the opposite. The market was expecting, 25, 27%, and they said, we're not even going to raise it up from 21. That not being in the plan completely changed the stock trajectory this whole week and really set the market up positively. Now, this is after big tech came out and really was struggling with supply chain. We saw almost every big manufacturer, Apple, Amazon, miss. We did see Google have really good earnings, and we saw Microsoft have really good earnings. But some of the other really big tech names did not perform very well. And yet we still saw stocks as a whole rise. And really, I think it's because of how positive those changes are for stocks and corporations from the new tax plan. Well, as always, appreciate you tuning in. We're here to support you. Your money's here to support you. We'll see you again next week.